Welcome back to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. Today I have an amazing guest with us, Chris Micucci. Welcome, Chris.
Hi, Scott. Thanks for having me.
Yeah, no worries. So for those that don't know Chris, I wanted to have him on. He's on our team. He runs and leads our U.S. division. So if you've ever spoken to me or us about loans, you've probably spoken to Chris. And if not, and you plan to in the future, you will. But he's also a big investor. So those of you that listen to the show, you guys know, that's how we set things up. We only want investors on our team if they're providing investor mortgages, right? So that's what Chris does. So we want to hear your story, Chris, because you own a ton of properties in the States, how you got there, how it's working out for you, and maybe a little bit about what's next. So we'll turn it over to you.
Sounds good. Thank you very much, Scott. Yeah, so as Scott said, I started investing in the U.S. 4 months ago, last month. So bought my first fix and flip. 2 months later, bought a couple of BRRRs, and then just progressed. So primarily, I've stayed in the Ohio, Michigan states for them. But yeah, for that, and then getting on the part of Scott's team was, as he said, being an investor. I was actually refinancing a couple of my properties and saw that Scott was in Canada. So I instantly asked, because I had my mortgage license in Canada, I'm like, hey, are you looking for people? So to me, that was part of the team, and being on the team, it's being able to help people. I've gone through issues with contractors, issues with loans, so I can help those. Again, a lot of Canadians, it's their first time getting into the States. I have the properties in Canada, and we all know that the numbers are harder and harder to make work. I wish that wasn't the case, but in the U.S., you can buy properties in Ohio for 100 and change and getting $1,500, $1,800 a month in rent. So, that is why, and all our clients that are reaching out, it's that their move. Most of them are Canadian investors that have just made that move into the U.S. for the cash flow. Appreciation in the U.S. definitely a little bit different, but that cash flow is there. And again, building on the clientele, it's that support. That's why I've been, so many clients have been happy with working with me, is because I have that support. We have the connections with, US based accountants, lawyers, things like that we can connect you with. Because again, you are investing in a different country. There are important steps that need to be taken. So again, anybody, when you tell someone, oh, I'm investing in the US, oh, you get double taxed, oh, this, that. All these horrible rumors that come out, we're here to support you so they don't happen. Because yes, you can get double taxed, but it's a very half-hour conversation with a lawyer to set up the correct entity, and you're never going to get double taxed. So, it's those things that we want to just keep supporting, and learning along the way. We've got the lenders that will do the cheaper properties to, smaller, 4 units up to the big commercial 52 unit stuff that we're working on now. So, and industrial land and things like that. So we have those lenders that will do anything that you can do in Canada, we can do in the US. And with that support of the background knowledge, and again, so I try to help, and a few people have commented with my support. I also have I do some teaching. I can support and kind of teach, and not just like a straight, this is how you do it, this is it. So I want to more coach you into the proper ways, and, and offer my 2 cents if you ask it for properties. Because I have tried, I work with clients. If you're not sure, message me. I'm happy to jump on a call, and maybe I can steer you away or steer you closer to it. Because again, we all have that analysis paralysis, especially in the States. So we want to help you make sure that you're doing the best thing for yourself.
Yeah, no, for sure. Now I have a question for you, actually, and this is not rehearsed at all, so you don't even know that I'm going to ask you this, which is super cool. But I get a lot of clients that call in, and they're like, okay, well, I'm going to give you guys a call because you're in Canada, but then I'm going to call a U.S. broker. But can you touch on maybe why that doesn't even matter? And if I'll just leave it to you. Yeah. So why does that not matter when working with us?
Yeah. So the benefit of working with us is because we're Canadian and we work with primarily Canadians, we have those lenders that work with Canadians. Again, like the U.S. lenders, the problem is, and to be honest, oddly enough, last night I had an email of a client saying, oh, I'm getting these great rates with this one lender. I'm like, oh, you have a credit score in the US? Oh, no, I don't have it. I'm like, well, they don't work with you if you don't have that credit score. So we ask the right questions, wherein that American lender may just assume you're American. Hey, do you have a credit score? You're going to throw your Canadian score, which we go up to 900. They only go to 850. So your score may even sound better to them than it actually is. So to us, it's that we work with the lenders, and hiccups happen even with the lenders that we work with. But more often than not, like Scott said, I'll have somebody call, oh, I get a better deal somewhere else. Okay, fair enough. We're not always going to be the best lender. And then 2 months later, they call back, oh, they changed all the terms at the last minute. They just then realized, oh, you're a Canadian, not an American Canadian. So LTV drops, rates go up. So that just for us is the benefit that our primary clientele is Canadian. So we know what a Canadian should have, expectations of that, rather than setting what an American, because they do get better rates, they do get better LTVs. So those things we can answer to the stuff that the US teams not necessarily can.
That's right. And we do actually, I will say, so as part two of your answer, is we have, we're getting more and more like US citizens or maybe Canadians with US partners. And I just want to clarify here too for everybody listening is we have a huge pulse on the US market because we actually have 2 staff that live in the States that are Americans that are on our team. So we have boots on the ground, plus we have the Canadian angle. So I think combined, it's unstoppable, right? Because if you just go, like Chris said, to an American lender, they're going to quote you based on if you're American. They're really not going to paint that picture like a foreign national. That's what they call Canadians, is foreign nationals. So we have that too, which I think is incredible because it just gives you that different perspective. And right there, I don't know, it's just more versatile, which I think is fantastic. Now, what's next for you, Chris? So I know you're investing in the States. I know you're heavily invested in Ohio. I know there's some stuff in Michigan. Where next? Like, do you see any market trends, any areas that you're interested in? Yeah,
so I'm currently kind of looking at liquidating some properties to move down to the Texas. I'm seeing, again, one of the big markets right now Canadians are investing in. That's Sunbelt, the Texas, Arizona. Definitely some great things going down in there. So yeah, again, the Ohio markets, the Michigan markets are great, but as Canadians, we know there is snow, there are, freezing rain. This stuff all leads to leaking roofs, leaking this, leaking that. Whereas the Texas, the Arizonas, it's dry all year long. So less to worry about in that way. So now looking at and scaling hopefully to bigger, commercial, smaller apartment buildings. Again, I've been doing the single to fourplexes for a while now, and now it's, let's get everything under one roof.
That's right. And like you said with the weather, I mean, for those that know Windsor, Ontario, that's where I live. And I mean, we have a ferry that can bring us across the water to Ohio. That's how close it is. There's literally a ferry that does that. And Michigan is just right across the bridge. We just drive across. So it's the same weather that's in Southern Ontario. So yeah, going to the Sunbelt states, much different. Plus Texas, they're just Texas. Their whole economy is bigger than Canada. Yeah. All of Canada. Yeah. Just Texas.
Yeah.
So it's crazy.
Yeah. And that's it, right? And again, even the markets, I've only mentioned a few, we have clients all over. I've got a client that's purchased houses. She was driving down to Florida, stopped in Georgia in some small little town, fell in love, has short-term rentals there now. It's because the U.S. has so many people everywhere in small towns to the big cities, there are those opportunities to find those houses there. So it is, if you want something that you can travel to, again, every Canadian, Florida, you invest in Florida. Again, another great market for the short-term rentals, but there's just those opportunities for the U.S. And in the US, again, we just to talk about qualifying for the loans, there it's asset based. It has nothing, where Canada, it's all about you. The US, it's does the house cash flow? It cash flows, you qualify. So if I can get you a rate, that means you're qualified. The only part you have to do is have that deposit to make sure that you can pay that portion. But if that house makes $1 a month, it will qualify for a loan. So very, very different than what we're used to in Canada. They don't care. They don't want, I'm not looking at your T4s, your income slips, letters from your employer. Tell me how much that property is going to make. Let's get you a rate that day.
Yep. No, I love it. And I know too, because we've talked about this in previous episodes and stuff. So I want to hear sort of the live up-to-date numbers from you. But a lot of Canadians that are looking to invest in the States, we get a drastic amount, but we'll get those, I want an Airbnb in Florida kind of thing. Yeah. And then we'll get those, I found a $30,000 home in Ohio that I want to get, right? Like we get a lot of that too, because they have them. They literally have them. But can we talk about current sort of loan to values so people know how much money they have to bring in, and also minimum loan sizes? Because that's the thing. The U.S., if you're American, and I mean American, not foreign national with green cards and stuff, they will make exceptions, and they do go down to smaller loan sizes. But for Canadians, it's totally different. So I'll turn it over to you to tell us about that.
So for purchases, you are typically looking at 30% down. If you're getting up to the higher loan amounts, that $200,000 and above, we can get you that 25% down, so 75 LTV. But typically it's that 30%. So, that rates, high sixes, low sevens is really what I'm quoting people at now. So again, those two things are a shock for Canadian, because we're used to, max 20% down on most deals, and rates in the fours, less than fours, because a lot of people are just thinking of their primary mortgage. So those rates, but again, you have to remember 6% on a $120,000 mortgage is a lot better than 4% on a $500,000-$600,000 mortgage in Canada. So it is, those rates, but easily. And in the States, they have something that we don't really have in Canada. You can buy down your rate. If you're like, what, I want to get my rate to 6%, you can pay a fee, not with all lenders, but a lot of the lenders allow you to actually buy down your rate. So, if you want certain cash flow and you have some funds up front, you're like, I'll pay $5,000 to buy down my loan 1% or more. That is an option. So, it's not, we're going to quote you at first the par rate, but there are options to actually go lower than what the original quote is. So
That's right. And for those that are listening and they're like, why is the U.S. more money? I just want to bring it back to the bond market. So if you guys look at Canadian bonds, they're low 3% right now, right? And so that's what the banks buy them for. They mark them up and they sell them to you packaged as a mortgage, right? So, the banks might make a 1% spread on that or whatever, but the bonds in the States are much higher. And the reason for that, I believe, is because of where the money flows, right? Like, it's supply and demand. People want to invest more into the States, so their bonds have a higher price, right? Because it's supply and demand. So keep that in mind. So it's not that it's necessarily higher. I mean, the spread above the bond prices are very similar. It's just that the U.S. is more in demand, so their bonds have a higher yield. Now, one thing to touch on too, which is super cool, and maybe you would have said it, Chris, so I hope I'm not stealing your thunder, but after 5 years, the loans become fully open in the States, where Canada, right, after 5 years, you're renewing into a brand new, probably 5-year. That's the most popular term in Canada. But in the States, that doesn't happen. So you can switch lenders or do whatever you want at any time after the 5 years, penalty free. Of course, you're paying title or legal fees, but there's no penalty to do so. So I think that's incredible as well.
Yeah. And to back on what Scott was saying, they have their mortgages there. You can opt to have an open mortgage, so you could sell it a week later. rates typically are higher because the bank is, they're not looking to lend you a mortgage for an open period, but you can have a mortgage that is totally open, that you can do whatever you want. And the next day, if you're turning it over, not necessarily make the most sense, but just an example that it is different, that, or like Scott said, after 5 years, because their mortgages, they're 30-year terms, not 30-year term, but 5-year amortization. It is what you pay today is what you'll pay in, 2036 or 2056, sorry. That is that same rate. So, had you bought back in COVID times and the terms were really low, you may never refinance just because your mortgage is such a cheap rate. So definitely slightly different than Canada as well.
Yep. No, I love it. I love it. So, no, that's great. And what I'm going to do, Chris, is I'm going to put in the show notes our booking link for somebody to book a call with us and whatever. So if you guys have questions or you're interested in this, or like Chris said, right, you want to set up that entity properly so you're not being double taxed, right? Like, we have all those resources. We're an open book. We'll share them. In return, obviously, we do want your mortgage business, so it's not charity, but we'll give you all the tools we have, and we'll do our best for you on the loans. But did you have any other final statements or anything you wanted to state before we end the show?
Yeah, no, like just adding on to what Scott said too, the benefit of coming to, at least to us, is that we have that experience because working with the Canadians. Because if you went to just a U.S. accountant to set up an LLC or, an entity in the States, the Americans use the LLC, which isn't recognized in Canada. So those things, the U.S. accountant may have no idea because he doesn't deal with the Canadian stuff. So that's where, having those calls with us, we can give you that background and support. And like I said, I'm happy to have a call and discuss what your options are for a house or anything else.
Yeah. And not only that, too, I think the other thing that's super, super important is that you are an investor.
Yeah.
So these are investment property mortgages. You wouldn't want to work with a guy, and I joked about this in the past, but there's so many brokers that literally live in their mom's house, right? So would you rather be taking advice from somebody that lives in their mom's basement who's not, graduated to, success in the investing world, or would you rather work with someone like Chris, who has multiple properties? He didn't even say how many he owns, but it's definitely a lot. And the level of expertise you're going to get from him and understanding is going to be completely different than our friend who lives in his mom's basement. So it's a big difference. So,
there is.
Yeah. So awesome. Well, I really appreciate you, Chris. Thanks so much for joining us. And for those that are listening, the details will be in the show notes, and book a call with Chris. You'll be impressed.
Sounds good. Thanks a lot, Scott.
All right, no problem. Take care.
You too. Bye.